Hey, what's up, guys? This is your boy, Mr. FX, and today I want us to look to a different pair as I promised that I'll come with three pairs. So we start with the euro, and then the euro USD. Remember, we talked of it. It was having a decisional area and an extreme. So you trade carefully and you make sure that you wait for better, stronger confirmation. Now, this is the second one, the Swiss. Yeah, this we use it to trade the USDCHF. Now on the Swiss here, what we're going to do is that let's look at it fundamentally, then we'll put in our technicals, yeah? Now, fundamentally, let's start with the retailers versus smart money, okay? Now, here, these are the actual position of, these are the actual position of retailers in the market. And we want, the reason we come here, we just want to see them in one side, like moving on the same side. These are the retailers, these are the hedge funds or the fund managers. And we know that the moment they are bearish, like what we are seeing here, they are bearish because according to their previous behavior, they were bullish. Their previous behavior, as you can see, they were bullish there. And look at this as well. They are bullish. Their previous behavior, they were bullish. And every time they create a bottom, we expect the market to pump to the upside. Look at this one here. We got that pump. The previous behavior, like here, they were bearish because previously they were bullish. So look at this. We get that pump, and here, bearish, bearish bottom. Expect a push to the upside, and even here, right? So look at this. We just want to see their behavior, and once they are in one direction, this gives us a room like to go to phase two. And when you go to phase two, so that's when we make the next decision. And this is a report from the Commitment of Traders report, the COT report. If you can be able to go there, you'll be able to see these things for a while. I'll make a video about that so that you can be able to understand what I'm saying. Now, once we have that, now we need to look at the smart money, what they are doing as well. These are the commercials net position, right? And we know that how they move according to the behavior of retailers. And if retailers are bearish, they are always bullish. And that's why you see every time they create a top, the market must pump. Every time they create a top, the market must what? Must pump, okay? So this is what we are seeing here. And you can see when to around there. So that's what we just look at. But let's look at it in terms of their index, right? Let's bring in the index. How strong are they? Look at this one. The Swiss, yeah? The Swiss will look at the commercials again in more strength. And here we can see they're at 79%, almost there. And what I like about this is that we're looking at the behavior of the index and also the smart money. If they are bullish, you want to see on the index reflecting the same. The same here, they were very, very bullish. That's what we got a push to the upside and again here. So let's look at this. This is just a period of like a focus, like a period of 6 months there. Can look back on how they've been positioning themselves for like a whole year, right? Now, look at this one. You can see they are very bullish, very, very bullish there. And again, look at this again here. I know for that is 2 years there. 2 years, we see that these guys, they are very, 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 very bullish there. So this puts you in an area to get to your bias that we are now bullish, and you should prepare to do it, to look for a buy position. So after we get that, you can now go to a daily time frame and look at the value of the dollar versus the Swiss, yeah, the Swiss franc. And here we look at just the dollar index. We want to see it being undervalued, and you can see it was undervalued here. This was very nice. And the dollar, since it loses strength against the Swiss, yeah, then the Swiss is supposed to go up. Now, we can look at the algo focus. Now, look at the algo focus. You see, you're going to have some kind of funny things, but it will eventually push to the upside. So don't know how long this is gonna take. Maybe today being on Thursday, so maybe this will be on Monday. Then we might get next week is when we're going to get a proper move to the upside. So once we have this now, you can now put in your technicals and you try to look at this pair. Where is it going to go? Now let's put in our technicals and anticipate what is the direction of this particular pair. So I'll start with the monthly time frame to do something sort of a top-down analysis here. And when you look at this pair according to 1 month period of time, it has been bullish all the time. So let's look at it from this perspective. Okay, we start from here. The inducement is here. Inducement is here. And this is our high, is our low. Break the structure to the upside, boss. Okay. We look for new inducement again. Where's the inducement? The inducement is here. High, the low is here. We break the structure again. Boss. To get the boss, where's the inducement? Our next inducement, there's an inducement here, but let me zoom in a little bit for clarity. Yeah, our inducement is here. Yeah. Inducement is very, very important. Inducement is very, very important. Once the inducement is taken out, once inducement is taken out, you can confirm your high. You know, this becomes a major high here, right? Now, once our high is confirmed, there's a new breakout structure here. New breakout structure here. This is a major low. Now, there's a new inducement again. Our new inducement according to this structure. This is the inducement. Wait for it to be taken out. Then we get our major high here. Now, once we get that, you can see we have this other block here. Price might if it wants to go up, can mitigate this level and go to the upside if it really wants to go up. But because this other block is not mitigated, so the price is still bullish. Now, what is going on here? Because after the price took out inducement, kind of started going up and up. So this is what we call the internal structure, right? This is what we call, let me show you, external, internal, external, internal, then external again. So what we are seeing here, for us to see properly what's going on here, we can go to, is it a weekly? All right, sorry. We'll go to weekly time frame. And on the weekly, let's see from where's the lowest low this market created. After taking out the inducement, this is the low that it created. So for it to go up properly, the weekly inducement is here, taken out. Okay, it's a low. The market has to close to go up. Let me just look at it previously. What's going on here? Okay, this is a low, the inducement taken out. Then the market came down, took out what we call the internal inducement here. Yeah, this one, this is an internal inducement. Now, if it takes out inducement, this is like a reversal, this is a high, a low. It closes above it, we get what we call a continuation like that. Breakout structure here. Right, once you get that kind of breakout structure, where's the inducement again here? Inducement taken out. This a high. And see mitigation of the shadow here. Mitigation of the shadow. we get the breakout structure again to the upside. So this is the internal structure. And we're following the same rules. Breakout structure, where's the inducement? The inducement is here. Major high. Now this was the major low that should not be violated. If we close below with the the body of a candle, then this will be what? A change of character. So let's see what happened. It's just a sweep. And sweep. And here eventually a close. So if it closes with the body, what does it mean? This is a shift on weekly internal structure, change of character. Then for it to go up, it needs to take out inducement. This is what the high, causing the low, or inducement there. So the market has a room to go up, but should not violate this high, right? That's the range of price between that high and this low, okay? So these are our low here. So let's see how the price is playing around between this range. Sorry. See, we broke that structure. So if we broke that structure, there's a change of character again, and the price is now bullish. Yeah, draw it in time like that. That is a change of character. Okay, once we get the change of character, remove that low. Now we need a new inducement. You can see, hold it to this structure, breakout structure, inducement taken out. This is a high, the low, the high and the low, because we broke here, close to the candle, breakout structure, with the internal inducement here. Inducement is there. These are high, high. Then this is again another change of character here. Choke. Also get the change of character, you need inducement again. What's the inducement? The inducement is here. Inducement, then this here, lower low. Market will go up, mitigation of this supply zone. There. And then we go to the downside. Break the structure here, boss. Again, you need inducement. Where's the inducement? Here we don't have an inducement. Inducement is here. Now, once you get that inducement, what does it mean? If you violate and break this major high, the upside, that's another change of character. Change of character, and you can see when if the market is going up, it will take out what we call the internal structure as it goes up. Now, where's our inducement here? According to this was the inducement here, taken out. High, low, and local structure there. Boss, again, the new inducement is where? The new inducement is here. So fundamentally, we were bullish. Let's see here if technically also we are bullish. So we come here, we can see what happens here. After inducement, if you know how to identify an order block on a different time frame, look at this. This is a super liquidity. And when you never have a super liquidity and you realize that the order block in terms of the body is mitigated, go with the wick. The wick is also an order block on a different time frame. Let me show you this area on like the 4 hours. I hope on the 4 hours you'll be able to see it. Yeah, the 4 hours. I don't know if this broker will allow me to see the data of at least 4 hours back. Okay, here. Let's see. Yes, there. In fact, this one is not even. It's not that clear. Let me look at it on a daily time frame, because when I go there, I'll have to refine it. Let me use a daily time frame. If I use a daily time frame, if I go to a daily time frame, okay, here, kind of everything is almost mitigated. To go the body here, I want to refine this area so that it can be an order block, so that you can be able to see it. Let me use the 3 hours time frame. See if we'll be able to see it. that you might be able to see how you identify a hidden order block. The problem of over refining an area, the more you refine again, the more you lose it. But you can see around here, we refine it now, we'll end up with a zone like this here. You see, that's a candle. Now that's a refined order block. Now let's go back to the view on the weekly time frame and see if that area makes sense. Look at that, our refined area. Our refined area of interest is here. You can see it was mitigated. So once it was mitigated, then this means that we are bullish on Swiss franc. So we want to see it break the structure again to the upside. And if that is the idea, then look at this. The market has taken out what we call the internal inducement. Internal inducement. This is what we call the internal inducement, like using a smaller high, something like that, yeah. Right? That's just a small inducement. So you can see the price is between two levels of interest, extreme order block, demand, and what we call a decision demand here. This is just accumulation of these orders here. So for you to properly see this, let's do this. How you identify a hidden supply, that one I already explained. So I'll not repeat here. Price mitigated that level. And once we have that mitigation, we can see now, since our fundamentals were bullish, so of course, when we are here, we try to attempt to use this area and an extreme. So again, we have a decisional area and an extreme, the same way we had the same idea with the Euro USD. So I'll go to 1 hour time frame. And when I'm on 1 hour time frame, what I want to see is that what is happening here after the market mitigated the level, this level. Look at this was the previous inducement taken out. This was your low, this was your high. The market broke this structure, right? Break of structure. This is your boss. This is your inducement. All right. On a normal circumstance, when you tap your high time frame point of interest and price breaks this one, this is your change of character. But let me call it a minor change of character. But the proper change of character is when the market takes out that major level, right? I just call it CH, right? So here we can trade an internal pullback to the upside, or you can trade what we call, you can wait to trade external. Like external, what I mean is that you wait for the market to break that high, take out the inducement, mitigate any level of your interest, and you take your long position. Or else you can prefer to work with what we call the internal structure, which is mostly you can find it good on 30 minutes. And you see in 30 minutes, when you look at this in 30 minutes, this is how it looks like. The market will always do the same thing. Take out inducement. Then we have high, low, break the structure here, the body. And again, you go back to the rules, wait for inducement to be taken out. Where's the inducement? There's no inducement here. The proper inducement is this one, taken out. Now, you see here, high, low, break the structure again, break of structure. Then this what? This again, another major inducement being taken out. When major inducement is taken out, what do we have? Have the high, and now I see a lot of accumulation here. The price comes here, the beta, and you look for a long position to the upside, right? And if you're bullish on the Swiss, then it's the same thing because it's the rate price of the USDCHF. Then you just go to USDCHF, right? And here what I have here, USDCHF. And when you go to USDCHF, because already you have what you call, you already have your areas of interest. So I'll just go directly to the zone. And here you'll be looking for a short position. And I'll show you here on the Usdchf. This is your area. Was it on daily or daily? Sorry, guys. When you come to Usdchf, you're going to realize that on Usdchf, if you're bearish and the market was bullish, like you're looking for a short position, then this is your area of interest. So I'll just put my lines here, all right? This is your area of interest here. So this area is more visible on a weekly time frame, but because of time, I'll not be able to cover that. Just want to be precise around that area. So the market went in, and you can go in there and apply your technicals again, right? So let's see what happened here. Now you can see the price after tapping into that area of your interest. Look at this. This is what you're having. This is your inducement is here. Your inducement is here. This is your high. This is your low. And the breakout structure is here. Both. Now, for a major change of character, you have to wait for the market to break this level and close with what? With a candle. That's going to be a major change of character. Is it really a major change of character? Let me see. Just a minute, guys. Just a minute. Yeah. Yeah. True. We break this structure. This is the deepest low that if it get broken, change of character. But here the market has just swept the level. Now let's go to 30 minutes and look at the internal structure. Try to see what it is this internal structure. So here, when I look at this one, I see first of all mitigation of this order flow and this order flow, right? Now we have here the record structure goes on 30 minutes. Is this really a breakout structure? Yeah, it is, man. So that's the breakout structure, take out the inducement. Inducement taken out. This is your low, lower high. Breakout structure again here. Okay, once you get the breakout structure, now where's your new inducement? Your new inducement is here. This is a major one. I'll go with the major level. Inducement is taken out. This is your low. So for you to go down again properly, you need to find your level of interest, and you see this accumulation, this level to me looks so good that if the market is pushed to that area, then go to your lower time frame, find what you call a proper change of character on how you understand your way, and look for a sell. If not possible, then be patient enough, wait on 1 hour time frame, let it break this area very well with the body, right? Let it mitigate here and break this level very well with the body. Take out inducement, mitigate your order flow or something, then look for short position. So this is another position, another trade I've given you, long-term sell, and prepare to deal with it. So this goes down to your personality, what you like. And guys, yeah. So make sure that you follow, leave your comments, and what will you like me to talk about again on the next video. So the one that is remaining is one. That is the NSD USD. So guys, I hope I'll see you in that video. And don't forget to leave your comment and what you think about this. What's your opinion? And I'll be glad also to respond to your comments. Otherwise, guys, see you around on my next video.